Okay, time is 5:38. We are going to get started with the budget workshop. It's not a budget workshop.
The public hearing.
Public hearing.
Yes.
Yeah, the workshop was last week. Well,
Okay, good evening, board members, Dr. Asayas, ladies and gentlemen of the public. We are here for the public hearing to discuss the tax rate and the proposed annual budget for the 2018-2019 school year. Board members, you should have a binder. And I'll be going over it, and it will be on the screen for the public to see. So the first thing we're going to discuss is the Citizens Guide to our budget, and we'll be discussing the proposed tax rate. What is the district budget? It is an annually revised document that describes the financial performance and the detailed financial allocations made to maintain district operations for the proposed budget year. Basically, what we do is we look at all our expenditures, we break them down by function, and that's what we'll be presenting later. The purpose or the objective of the budget is to communicate the financial plan about the district operations to the public. Don ISD, Board of Trustees, and all members of the organization for each budget year. So that's what we'll be doing. We're going to let the public know, and the board members and administration, how we're planning on spending our funds for the upcoming school year. One of the key components that we consider when preparing the budget, it is our property taxes. And here is the tax rate for the upcoming year. We are proposing no change. We are maintaining the maintenance and operations at $1.17, and we are maintaining the interest and sinking at 0.0882 cents for a total tax rate of $1.2582, which is a no increase. There is no increase or decrease, no change to the tax rate for the upcoming school year. We did have a slight increase in property taxes, so about a 2% increase, which we'll be discussing in detail in a little bit. And if anyone needs any additional information on either the budget or the tax rate, feel free to contact me at the business office, and my information, phone number, and email address are listed there. So now we're going to be discussing some of the major considerations when preparing this year's budget. You have there on page 1, we have 11 things. There was more than 11 things. These were the 11 major points that we consider when preparing the budget. The first one was that we estimated revenues, planning with a decrease in both enrollment and ADA. We are projecting a decrease in student enrollment of 297 and ADA of 244. Of course, if we go over these numbers, that will be more money that we generate and put back into the district's fund balance. The other consideration was the property values. That they did increase by $28 million, which resulted in roughly $331,000 increase in local revenue. It's under a 2% increase. The next consideration was that due to the decrease in enrollment in ADA, we're also projecting a $6 million loss in revenue based off of those losses in ADA. We are also not increasing the tax rate, as I discussed earlier. We will be leaving it at $1.2582. The other thing that's built into the budget is a $2 million health insurance fund subsidy. We are also proposing a no increase in employee compensation. Some of the other factors that we happened during the summer were the reduction of 5 days for all staff other than teachers. That resulted in a savings of $1.2 million. Considering we had a $6 million shortfall in our state revenues, it was very important that we looked at ways to make cuts and save some money, and that was one of them. The other one was the elimination of the birthday holiday. We also had a decrease in staffing due to the implementation of new staffing guidelines. By using those staffing guidelines, we're able to repurpose some of our positions into our newly expanded pre-K program, which we'll be able to fund out of our federal funds. Also, we took into account a $1.3 million lease payment to Dell Financial. And lastly, we decreased departments, campus and department allocations by 15% for a total reduction of $1 million. And this is coming from the last budget workshop to this one. This is what you'll see different. There is a $1 million reduction. Not all accounts were hit. All the campuses and all departments were. What we did is that we went through all the accounts. We took out anything that was compliant, that we still had to be compliant with the state, our state programs, like our bilingual, state comp, career and technology. We took all those out because we still have to maintain those 52, 58% of expenditures, 55. We had to keep those, so we took all those out. Then we looked at all our commitments. Anything that was a lease that we have to pay, there is no way that we can reduce it. Took those all out. Everything that was left off, our discretionary funds, we applied a 15% reduction. And that was a $1 million savings.
Casino.
Yes.
Real quick on number,
Sure.
I guess it was number 9, where we had a decrease in staffing. That is due to attrition, right?
Yes, correct.
Strictly attrition. There was
Correct.
nobody who was laid off?
No, sir.
Was...
No, sir. We are just closing positions and being able to move that staff where it's needed. Correct. But it creates a savings because now we don't look at adding positions as opposed to just moving and reallocating our personnel to the areas of need. But no, it was under attrition. So those were the major factors that we're taking into consideration when preparing the 2018-19 budget. We go to page number 2. It is a very short summary, just a snapshot of where the 3 funds stand. The 3 funds that are required to be approved by the board are the general operating fund, the food service fund, and the debt service fund. So the general and the food service fund create the general fund. Here we have to separate them for purposes of approval. You have there for the general fund estimated revenues of almost $145 million, appropriations of $147 million, with a transfer out to the health insurance fund of $2 million. So that creates a taking out a fund balance or a deficit of $4.1 million. The food service fund, it has its same estimated revenues and appropriations. There is no net effect to the fund balance. And the debt service fund has estimated revenues of $5.6 million, appropriations of $6.6, for a shortfall of a deficit of $941,000. Total combined, we're looking at combining the 3 major funds of a deficit of $5 million. We turn over the page, number 3. This is actually what you will be voting on when we go into the board meeting. This is the actual proposed budget for the 2018-19 fiscal year. You'll see there it's broken into 4 different columns. The first one in maroon is for the general fund. Then the next one in green is for the food service fund. For the debt service will be in gray, and then in total combined, it will be in the yellow column. And you have a breakdown by revenues. The general fund for local sources, it's at almost $18 million. For state revenues, $122 million. For your federal sources, $4.6 million, for a combined $144.8 million in total revenues. You have the breakdown of expenditures by function, and you can see that our largest expenditures in function 11, this is where we mainly pay, well, this is where we pay all our teachers from, and anything that's student related. So it is by far our largest expense at $82.3 million. Then you have instructional resources or library services at $1.6 million. Function 13, which is curriculum development or staff development, at $2.3 million. Instructional leadership, those are mainly administrative costs, administration, at 1.7 or 1.8 million. School leadership, this is the campus principals. This is administration at the campus level. It's at $7.2 million. Counseling, $5.5 million. Social work services, almost $1 million. Health services, $1.8 million. Transportation, it's at almost $6 million. We don't have food service on our general fund. It will be on the next column over for food service at $12.2 million. Co-curricular, extracurricular, these are our athletic events, UIL events. Those are at $6.3 million. General administration, $5.2 million. Plant maintenance and operations, almost $17 million. This is where we pay our utilities and all our auxiliary, all our maintenance personnel costs. Security and monitoring services, function 52, it's at almost $3 million. Data processing services, $4 million. Community services, $200,000. Function 71, debt service, it's at $1.6 million. Payment to the JJAP, $113,000. And other intergovernmental charges, $247,000. That is what we pay the appraisal district for doing our tax collections. It's at $247,000 for total expenditures of $146,927,230. That creates a shortfall. If you look at our revenues, we have excess expenditures over revenues. So we have a deficit, operating deficit of $2.1 million. Factoring the transfer out to the health insurance fund at $2 million, we have a net change or a deficit on the general fund for $4.1 million. Our food service fund, you'll see its balance. Our revenues equal our expenditures. We don't foresee any having to take out a fund balance. Unless we have to, we are only allowed to keep a 3 months operating expense. So sometimes we do have to make expenditures out of fund balance just to be in compliance with the Department of Agriculture. The debt service fund, local revenues at $1.3 million and state revenues are $4.3 million for total revenues of $5.6 million. There's only one function here, it's all debt service. This is where we make all our bond payments from. It's at $6.6 million for creating an excess of, a deficit of $941,228. So that's how much we'll be short on the fund. That will be taking out of our fund balance. And for a total combined of the three budgets, you see their total revenues of almost $163 million. And total expenditures of almost $166 million, creating a total deficit of $5 million. The next page is basically a summary of the three funds and a breakdown of the revenues. In case anyone is wondering, we have property tax collections, and you can see there's a breakdown. We have $17.5 million on the general fund for property tax collections, interest and earnings. We're estimating $40,000. Co-curricular enterprise, those are money that we generate from ticket sales. For football games and other games, it's about $156,000. $2,000 in tuition and other miscellaneous revenue of $107,000. The bulk of the funds or the money that we receive comes from the state, and the major two components are the available school fund at $6.1 million and the foundation school fund at $108 million. The TRS on behalf benefit, or we classify it as revenue, it's almost $8 million, and other state revenue at $60,000. Federal sources, we have two different ones to break down. The $2.5 million and the medical reimbursement or the insurance at $2 million for a total of $4.6 million. And it is a combined, all three sources of $144,786,569. $12.2 million for the food service fund and $5.6 for the debt service fund. It is the same amounts that I have up here. If you look at revenues, all I did is a further breakdown of how those revenues are made up from. And the next one, the burgundy, the top table is for the general operating fund, and it's a breakdown by function and by major object. So at the very top, you see the 6100s, those are our salaries. So on our salaries, you can see from our general fund, we pay $119 million out of the general fund. And then you have the different breakdowns by function for each major object code. Then you have the totals on the bottom. So for the total for the general fund, 6100 is $119 million. For the 6200, those are contracted services. You have $12.5 million. For general supplies, or for supplies and materials, you have almost $5 million. Other operating expenditures, $5.4 million. Debt service, $1.6 million. And capital outlay at $3.3 million. For a total of $146,927,000. You have the food service fund right below it. It also has a breakdown by major object, and the debt service fund also at the bottom, and all of it is on the $6,500, which is for our debt service. In detail for the general operating fund, some of the things, an explanation of some of the things that happened. Again, we go back to our revenues. We have revenues of $144.8 million. Non-cash revenues, it's $7,894,078. Those are the TRS on behalf payments. We have to put an expenditure and a revenue. They end up washing off. They match at the end of the year, so they have no cash value. So the net cash value is $136.8 million. And then you have a breakdown of the property taxes. Our valuation is $1,457,278,404. And we budgeted 95% of the tax levy. And there is our tax rate at $1.2582. $1.17 is for M&O or for the general fund, and 1.0882 is for our INS or for our debt service to make our bond payments. The total tax collections will be $16,663,134, of which the general fund is $15.5 million and $1.2 million for the INS, for the debt service fund. For prior year taxes, we budgeted $1.1 million, and for penalty and interest, $905,000. Interest earnings of $40,000, and then on the bottom you have the state program, and it's the same thing that we presented earlier. We have enrollment. ADA was projected at 13,509, projecting a decrease. For the available school fund, that will generate $6.1 million, and for the foundation school program, $108.2 million. We have our SHARS program at $2 million, and other federal government revenue at $2.6 million. On the next page, it is a comparison of this year and last year's, or the amended budget that we're presenting here, and you can see the decrease. You look there on the state revenues, there's a $6.8 million decrease. And then you see by function all the reductions that we did on that gray column. So for a total of $2.6 million in reductions. The next page has just the general fund. Again, it's the same breakdown that we had on the revenues that I went over earlier. It's just separating it just by the general fund, and the other one had all three funds combined. The next page, page 10, is revenues, and you have a percent, and you can see the majority of our our revenues come from state sources at 85% of our budget. The same breakdown that I presented earlier by function and major object. And on the next page, on page 12, it's again the same breakdown by function, major object, and it gives you a percent. So we're for payroll costs, we're back up to 8103. We reduced everything else, so therefore the percent on salaries increased. The food service fund has the National School Lunch Program and the Breakfast Program are the two major contributors into the revenues of the school of the food service fund. The National School Lunch Program at $7.6 million and the Breakfast Program at $4.6 million. Our major expenditures are our purchase of food items and our personnel costs. Our food items are at $6.4 million of the budget, and our personnel costs are about $4,534,000. On page 14, it's a breakdown of the food service fund. Revenues, you have our local sources, $278,192, and this is mainly from the sales of food. State, $61,000, and federal sources, $11.9 million, for a total of $12.2 million. We only have one function under this fund, it's function 35, and we have appropriations of $12.2 million for a net no change in fund balance. The next page, page 15, has more detail on the breakdown of the revenues of local sources, state, and federal. If you see, the federal is the largest one by far with the $4.6 million and $7.6 million. Again, a total estimated revenue of $12.2 million. And for the food service fund, we also have here the revenue, a percent. You see 97% of the revenues for the food service program are generated from federal revenues. The next slide, number 17, has the major program, major object code for function 35, and you'll see there that the largest cost is supplies and materials at 7.2. The bulk of it is from the purchase of food, and the next one is the payroll cost at $4.5 million. The next slide, on number 18, you'll see by percent, the supplies and materials is 59% of the cost, and the payroll costs are 37.2. The debt service fund is the fund that we use to pay our bonds. Our revenues are at $5.6 million. We have only function 71 at $6,567,450, generating a deficit of $941,228. The next page, number 21, has the detail or the breakdown on your local sources. We only get two major sources, the local and state. There is no federal revenue. The bulk of it comes from our state aid at $4.3 million. You go to the next one, you'll see the breakdown. State revenue is 76% of the revenue generated for the debt service fund. We also have it broken down by major object. Debt service, $6.6 million for bond payments for the upcoming school year. And then on page 24, this is our last page. This is our debt amortization schedule, and you have here our debt payments for until we pay all our bonds up to 2040, and when they're due and how much is principal, interest, and the total payment. And that concludes the presentation on the proposed budget. If anyone has any questions?
Anybody have questions, comments? Thank you.
Thank you.
Who's the fan?
The drones.
You got a pen over there, man? You got a pen? Oh, that or what? Nobody's there. Something down, I had a pen. Oh, that's okay.
Okay, this concludes the budget, the proposed rate presentation, the public hearing. So at 6:02 p.m., we're going to go ahead and go into the special board meeting, and that's starting right now. So join us in the pledge. Name and signs, please. I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Okay, Roman number 2, business and finance.
like Wisconsin.
You should have a separate page. It's the same one as in the booklet, page number 3. It's up on the screen. That is the proposed budget for the 2018-19 school year. It's broken, the 3 different ones, the general fund, the food service fund, and the debt service fund. Do I need to go over it again?
No. What's your recommendation?
To approve.
I'll make the motion that we approve.
Motion by Mr. Avila to approve the budget,
I'll second it.
second by Mr. Billman. All in favor?
Favor.
Favor.
Favor. Motion carries.
Thank you.
Number 2, approval of resolution to adopt official tax rate for 2018 and 2019.
The Texas Property Code, section 26.05B, requires the Board of Trustees to adopt a tax rate each school year. The tax rates consist of the following: maintenance and operations at $1.17, and interest and sinking at 0.0882 for a total tax rate of $1.2582. There is no change compared to last year. The recommendation is to approve with the wording that's here. If you see it in quotations, that is the motion that needs to be made.
Approval of resolution on what that?
The motion needs to read, I move that the property tax rate be increased. It's here in quotations. It has to be, somebody needs to make the motion like that.
We don't have it here.
I will see it
In the recommended motion,
Yeah,
number 4,
Yeah,
the last sentence,
I don't have that.
that's how the motion needs to be made.
But it says, it's right on this page.
Second tab.
Yeah.
Second tab.
It's not the first page, it's the second page, where it says request for pay.
Second page of the second.
It says to increase, but it's not,
The rate won't increase. What is increasing is the effective tax rate, but not the tax rate that we're gonna use. It's a tax thing, so we'll have that increase because we're generating more taxes because the properties went up. So that's what it is, but the tax rate will not increase. I know it always throws me off too, because of the word increases.
Yeah, right there.
It will generate more tax collections because the amount we're taxing is more.
but that's been in effect for over a year, right?
Correct,
Since
so,
last year.
yes, so, the tax rate will not go up, it's the amount that we're collecting taxes on, or the property value that we're taxing that is increasing, so it generates more money.
Explain this one more time, please.
Yeah,
I think we're trying.
Okay, so, the reason it says increase in tax rate is not increasing the tax rate, the tax rate will remain the same. What increase is the property value, so we're going to generate more taxes because the property value is larger, as opposed to 1.2 million, let's say, now we're 1.5, so we're gonna collect more money on a larger amount, but the tax rate will remain the same. It just has to read that way for the effective tax rates. Those are 2 different things.
Can I approve of what you just said?
Well, somebody needs to make the motion exactly the way it reads here. The last sentence on on number 4 recommended motion,
Fine, you guys need help?
it says, I move that the property tax rate be
found it,
increased.
Yeah.
Yeah.
Okay, I'll make the motion.
Yeah.
As read here, I move that the property tax rate be increased by the adoption of a tax rate of 1.2582, which is effectively a 0.24% increase in the tax rate.
I'll second.
There's a motion by Dr. Marion, a second by Mr. Guerrero. All
In favor.
In favor.
Favor. Motion carries. Number 3, approval of certified appraisal rolls for 2018.
Texas Property Code, section 26.4 requires that once a local appraised tax roll is certified, by the local county appraisal district, that the roll must be then submitted to the Board of Trustees for approval for official acceptance. The Hidalgo County Appraisal District has submitted the appraisal roll for Dawn ISD for the 2018 tax year. This appraisal roll is used for the calculation of the projected tax collections for the district. And you'll see there, we have that slight increase, the net taxable value at almost $1,457,278,404. So this has been submitted by the Hidalgo Appraisal District.
Make the motion, we accept the rolls as certified by the Hidalgo County Appraisal District.
Okay, there's a motion to approve the certified appraisal rolls for 2018.
Second.
There's a second by Mr. Avila. All in favor?
Favor.
In favor.
Favor? Motion carries. Okay, on the consent agenda,
Is that yours?
you had something on number 2 under consent agenda, right?
Yes, that one needed to be, yes.
That needs to be pulled out for
Yes.
discussion.
After
So, yeah,
discussion, yes, number 2.
Okay, before you vote on the consent agenda, number 2 will be pulled out for discussion.
Yeah, that's number
Which
2 under,
two? A2?
number 2 under human resources.
B2.
B2, okay.
So you're looking at A1 and 2 and B1.
B1, we are gonna pull?
No, B2.
B2.
B2. It's on page 4.
Yeah.
Okay, yes.
All right.
I just want to clarify one thing. I know it's on consent agenda, it's not for discussion, but remember we talked about the bilingual stipend?
Yes, correct.
So we went ahead and we actually added that, so all our bilingual teacher will get their stipend for this coming school year.
Okay.
Very good.
So right now we're gonna vote on the consent agenda, correct?
Yes.
I'll make the motion we approve.
Motion by Mr. Avila to approve the consent agenda,
Second.
second by Dr. Mary. All in favor?
In favor.
Favor? Motion carries.
Thank you. Thank you.
Okay, under letter B,
B2?
yes, B2. Approval to award the RFP 041018-378 to United Healthcare for third-party administration, self-funded health insurance, medical, ASO, stop loss, and PBM services for the 2018-2019 school year. What is the,
We are submitting the item, this item was discussed at the previous board meeting, and the recommendation was to approve United Healthcare, and it is still the same recommendation. What we did not include, and we wanted to make sure that you saw it, was the tabulations and how the committee voted. So those attachments should be there. However, since our recommendation is to still stay with the same provider, United Healthcare, after the committee, we did the tabulation, it still came out with United Healthcare as the recommendation. If the board is going to stay with the same decision, then we are requesting no action at this time.
Well,
It's mainly
What
to
was the
make you-
change on that then? I mean, what
There
was
was
it?
no change, sir. We did not do the official tabulation.
So they had the criteria, but they didn't use the scoring cards the first time, but they still used the criteria in their first evaluation. So just a formal procedural issue that they wanted to go through to make sure that everything was what they recommended, and she has the same recommendation this time as she did the first time with United Healthcare.
Okay, so no action.
So,
Yes.
Okay.
okay, so there'll be no action on number 2?
that's the recommendation.
Yeah, me too.
Yeah.
Correct.
Okay, so we're going to executive session as authorized by Texas Government Code Sections 551.071, .072, .073, .074, .075, .076, .082, .083, and .084. Time is 6:13.
Man.
¿Está en el audio?
Yeah.
Huh?
This is it.
He's
the last person in anyway.
No, I'm working on it.
Por estar pidiendo mi canción.
Sí, también.
¿Eh?
Ready? Time is 7:30. We are back in open session to take possible action on matters discussed in executive session. Discussion and possible action to approve the superintendent's recommendation of personnel, approval of recommendation for professionals, paraprofessionals, and auxiliary personnel.
Don't move. Make the motion.
There's a motion by Mr. Avila,
Second.
second by Dr. Mary. All in favor?
In favor.
Favor, motion carries. Letter B, discussion and possible action to approve pending or contemplated litigation settlement matters and/or matters where the professional duty under state board requires private consultation with the school attorney, and discussion and possible action regarding proposed resolution of Google versus DISD. On this issue, I will have to abstain.
I'd like to make the motion that we approve on the attorney's.
On the resolution?
On the resolution.
Okay.
I'll second it.
It's a motion by Mr. Avila, second by Mr. Billman. All in favor?
Favor.
Okay, motion carries. I need a motion to adjourn.
Don't move.
Motion by Mr. Avila,
Second.
second by Dr. Mary. All in favor?
Favor?
In favor.
Favor. Meeting is adjourned. Thank you all for coming.